Hello there, Kyle Sasser here, and it's everybody's favorite time of the month. That's right, real estate market statistics time. These real estate market statistics are for Pinellas County for March 2026. So what do we need to know about these numbers and statistics? What are we looking at? What are we interpreting? So what we always try to do is we try to compare year over year, meaning we compare March, meaning we compare February 2026 to February 2025. The reason we do that is because the calendar year has a natural ebb and flow to it. It tends to follow the school year as well as the seasons. So for example, things are pretty slow through the winter holidays, and also whenever school starts up, things really slow down. So again, we usually compare year over year versus month to month because, again, some months are just naturally going to be slower. Now, the second thing you're probably asking is, why am I calling these the March stats if the numbers are actually for February? And the reason why is because full month is kind of the best snapshot that we have that removes a lot of variables, right? So like if we try to compare a week to a week, well, holidays move around, weather moves around, so all of those variables have huge impacts on how many buyers are going out and looking at homes and how many homes go under contract and how many sell in any particular given period of time. So week to week and day to day, not a good time period for real estate. However, months, long enough time in there, everything kind of gets evened out. That's a very nice time period to compare. February is obviously a little tricky because sometimes February is 28 days and then one time it's 29 days every 4 years. So you kind of have to keep that in the back of your mind because every now and then 1 February will be considerably different. But again, it's kind of the best metrics we have, and that's what we roll with. So if you remember back to your mathematics classes, you might remember mean, median, mode, average, and median, those sorts of things. Mode we don't really use too much. Average, everyone kind of knows what an average is. You take, let's say, 5 homes that have sold, you add all of the prices together, you divide it by 5, and that gives you an average. Median is a little different though. What a median price is let's say that you have 80 homes that have sold. The median point is, it's the point where there's an equal number of homes priced higher and lower. It's kind of that balance point. The median price point tends to give a little bit better idea of what the market is doing because it removes a lot of the variability. So like if a large number of very inexpensive houses sell, or if like 1 or 2 extraordinarily expensive houses sell, that can really move the average around. But median tends to remove the effect that those far extremes have, which are not the vast majority of the market. So again, there can be some peculiarities with median, but again, there's no perfect metric in the world. So we kind of have to do the best with what we have, which is median sales price. All right, so let's dive into these Pinellas market numbers. Closed sales down 12.41% from 798 to 699 homes sold. Cash sales are down 22.78% from 338 to 261. Median sales price is up 1.12% from 445,000 to 450,000. And average sales price is down 0.90% from 606,000 to $601,441. Median percent of original list price went up a touch from 93.5% to 93.7%. But the big change, median time to contract is up 21.43% to 51 days from 42 days last year. Total number of new listings is down slightly. That's down 17.36% to 1,138. While active inventory is also down 5.37%. From 3,335 to 3,156. And as far as some doom and gloom, foreclosures and short sales, there was a total of 7 foreclosures and 5 short sales, which not too big of a shift. Although we'll say short sales did move from 0 last year to 5, which again, not a big total number, but definitely interesting that that jumped that amount. Now, I do like to cover the different price points because a $1 million house will generally sell at a little bit different time frame from a $400,000 house. And a lot of that is going to be just because the buyer pool is different sizes, so there's more people that can buy a $400,000 house, so those tend to move a little bit faster. Now, I tend not to read every one of these because that gets a little monotonous for everybody, but I do like to hit the high points and the general trends. Closed sales by price. The interesting thing here is we definitely have a lot more kind of lower price points. Some of that is going to be just because of the hurricane damage. A lot of stuff is still selling and liquidating out, Shore Acres and Riviera Bay and on the beaches and stuff. So, what once was a $600,000 house is now selling for land value, which is going to be that 150 to 200. So, for example, 150 to 200,000, 19 total sales, which was an increase of 72% compared to last year. But most of the houses for people that are buying homes to live in, that usually starts around the $200,000 mark. And, by and large, there's fewer of those that are selling. So 250 to 300,000 sales was down 36.49% to 47. 300 to 400,000 was down 6% to 173. 400 to 600,000 was down 12%. 600 to $1 million was down 10%, and $1 million or more total sales was down 25.7%. Median time to contract was up across the board, with the exception of, again, that 200 to 300 segment, and a lot of that is, again, going to be the storm damage stuff. So at like 250 to 300,000 is at 17 days median time to contract, which is ridiculous. Everything else is, 59, 54, 50, 79 days. So like 300 to 400,000 is at 59 days. 400 to 600,000 is at 54 days. $1 million or more is at 79 days, that is more than double what it was last year. Total number of new listings is also down across the board. Some are, more than others. But again, kind of looking at that 300,000 above mark, 400,000 is down 23.97% to 352. 600 to $1 million is down 3% to 263 new listings. And $1 million or more is down 19.67% to 192. And then total inventory is pretty much down in every price category. There's fewer homes for sale today than there was last year, with the exception of $1 million or more, which saw a 19.10% increase to 792 homes. Now, 400 to 600 was down 12.59%, 882. And 250 to 300,000 was down 19.70, a total of 159. So fewer homes for sale this year compared to last year. So those are the numbers for Pinellas County for March 2026. So what can we make of these numbers for the Tampa Bay area, Hillsborough County, Pinellas County, and kind of looking back towards the hurricanes and all that stuff. So Hillsborough County, overall, the market is a lot slower today than it was last year. That shows up clearly in the time to contract number, right? It's gone from like 28, 30 days to 55, 45, 55 days. And anything above like 35, 38, so like 30, 35, 40-ish is kind of neutral market. And then anything above like 45 is really on the buyer's market side. A little deceptive though, because median sales price has not reduced because of that. So we have a leading indicator, which is what median time to contract tends to lead where prices are going. But I think it's a little deceptive because the number of sales is the same and the inventory is similar to slightly down, and the number of new listings are also down. And also the other piece of that, which is the percent of original asking price, has not moved that much either. So what that tells me is that more houses that have been on the market for longer are selling, but they're not selling for lower than is typical. I will say, just kind of industry shop talk, both like in person and online, and looking at showings, looking at my listings, seeing how many showings we're getting, dealing with buyers. The overall feel is that things are slowed down. Buyers are taking more time to find the house. They're definitely being a little more aggressive on negotiations and a little more hesitant to make offers than previous times, because the overall feeling is there is a large amount of things to choose from, and the buyers kind of have the upper hand at this point. Now, that's the sentiment. The price numbers don't necessarily reflect that, because Hillsborough County has been right within, it is still within that price band, and you can go back through pretty much 2 years of these videos, and you will see that every time I talk about Hillsborough numbers for the last 2 years, they're basically within a $10,000 to $15,000 price band, right? Like $420,000, $425,000 to like $435,000, $440,000. It's just been bouncing between there. Inventory is up from where it was a few years ago, but it has stalled so far as continuing to increase. And the weird thing was, through the wintertime, inventory actually declined a little bit. So overall, it's a bit of a quirky market currently. It's definitely not the slam dunk that it was even last year. Like last year, the demand certainly came back a lot stronger, faster. And so, started showing up. This year, it's been definitely more of a slow roll increase, which we see in the numbers as well. I'm kind of curious to see what the April numbers are going to look at, because that's usually when we see what summertime is probably going to look like. So basically what I would describe it as is, so whenever you have like median price band, and we kind of been bouncing that, and St. Pete has as well, the shifts in the numbers in Pinellas County is a little odd, because you do have to remove the flood damaged areas, because they are a completely different market currently. When you remove the flood damaged areas, what you find is that mainland Pinellas County prices actually went up after the hurricanes, and then through wintertime they came down about $10,000, $13,000, $14,000, $15,000 through the wintertime 2025 to 2026, whereas Hillsborough County has held very steady. So whenever you have like a relatively steady price band, you have a leading indicator kind of showing one thing, but then the price isn't doing the other thing, and everyone's kind of like, what's going on? What that means to me is the market is currently at a decision point, and it hadn't really been at a decision point in previous years, because it had been even though everyone believes that June 2022 was a crazy peak of the market, which it was so far as demand for the number of homes that were for sale, right? Like we were getting 30 to 40 offers on houses. That does not happen anymore. It was peak craziness for that. However, after that, even though we were not getting 30 to 40 offers, prices were still steadily marching up. What's happened now is that steady march up has stopped, and we have these other indicators, median time to contract lengthening. Basically, the seesaw has come up level. This is kind of the best metaphor I can come up with it. The seesaw has definitely come up to level. It has come up the last couple years, and then what's always happened is very clearly buyers came back, demand came back, and we went back into seller's market territory. The difference today is that time to contract is higher than it had been, and the number of sales is such that demand is not increasing, it is holding, and inventory is higher than it has been for years. Even though it's slightly less than last year, it is still the highest it has been in probably 5-6 years. So the seesaw is definitely so let's say, 2025, the seesaw is like this, and then it came up like this. And what I'm seeing in these numbers is it's definitely come up a little bit more level. Now, what it would take to go the other way is time to contract needs to go higher, and then we should also see month supply go significantly above 3. And at that point, that is when we will know that median sales price will more than likely start declining. Now, many of you are probably saying, well, it's obvious that's what's going to happen because real estate bubble and et cetera, et cetera, et cetera. But the truth is we have a lot of other positive factors that have come in that people are still learning about, primarily interest rates. Interest rates are currently the lowest they have been since 2022. So currently interest rates are the lowest they have been since 2022. We had for years had been at high 6s to high 7s for interest rates. And currently we are easily in the mid 5s for most buyers, and can definitely go lower than that, with the buying points down or VA loans and stuff like that. And the Fed just came out and, they're not reducing rates further, but they also haven't increased rates either. So, that getting on people's radar, lower interest rates usually brings more buyers to the market. So, Yes, time to contract has grown. We are only selling a third of the houses that are for sale every month. Normally that would push into a buyer's market and declining median sales price. However, because interest rates have come down 1.5%, 2%, depending upon the last time buyers were looking at it, that tends to increase demand. And so I would normally think that we should see the buyers pick up. We should see closed sales also starting to increase. And then the additional piece here is new listings has not increased. And so if new listings do not increase, the number of buyers does increase. That means inventory reduces, time to contract will eventually shorten up again, and then we will be back to increasing home prices. I know it took quite a while to explain all that, but it's very simple supply demand stuff. Currently things are pretty balanced so far as supply and demand. 3 months is a pretty level market. Shorter than 3 months so far as typically when you start to see less than 3 months of supply, you tend to see increasing home values. And when you see more than 3 months supply, when you start seeing like 4, 5, 6 months supply, that's when you see a very strong buyer's market where median home prices start coming down. So again, we're at kind of inflection point. And honestly, we need another month or two of data to kind of see what this year is going to do. I tend to be an optimist, so I do think that the buyers are going to return and the market is going to hold or even increase slightly. That is, generally speaking, economically, holding steady is much better than a price decline. Price decline comes with a lot of economic knock-on problems, so far as economic productivity and just, it stalls out a lot of stuff. And that's also what real estate tends to do, right? So true price declines where you see 10% knocked off of a house price, those are exceedingly rare. And what usually happens is real estate makes a big move and then it holds for a while. 2009 was the Great Recession was a little unique in that it was a long multi-year slide. That's just not what typically happens with real estate downturns. So honestly, not looking to put money on which way this market's going to go, because we definitely have a lot of mixed signals coming in here, and that definitely, to me, always indicates that the market overall is deciding which way it wants to go. So yeah, that's the analysis for the Tampa Bay area. So thank you so much for watching this market report for the Tampa Bay, for Hillsborough County and Pinellas County. If you would like help finding your own great place in the Tampa Bay area, I would love to help you out. You can reach me at 727-300-2111. That is my real phone number. You can call it, I will answer it. You can also follow the link in the description down below. That'll take you to my calendar, and you can book a chat at the time that works best for you. I'd love to have a conversation. Thank you so much for watching. My name is Kyle Sasser, and I'll talk to you soon.